looks like we're in the middle of a Santa Claus rally right now. I'm looking at the S&P up just about 0.75% since the Santa Claus rally started. Is that an indication of what you're expecting for 2024?
No, it isn't. I mean, but one of the things that we do know statistically is when the market has a very good year, such as 2023, you usually can go into the next year and have a positive year. The statistics are fairly strong. But the other thing that is very important about this rally, and it's not just the Santa Claus rally, is how broad it's become. And that also is a very important indicator of what the next year is going to look like. As long as it remains broad and doesn't have just 5 or 6 or 7 stocks leading the market higher, you can see that the market is looking for value across the board. And that is a good sign for the next year.
You know, speaking of the rally broadening out a bit, I know you're looking at the energy sector. So I was looking at the XLE. That's the Spider Energy Sector ETF, basically represents it. And it's been really outperforming since the Fed took that dovish pause back in mid-December, up about 5% since then. Is that the broadening out that you're talking about? And do you think that energy stocks, they become more attractive next year?
Well, there are a number of catalysts for that. One is, of course, geopolitical risk. So something we don't want to see is actually a catalyst for the energy market in the event that the Middle East, the containment so far of the conflict, if it expands, that's going to be a catalyst for oil prices, not to inch higher, not to edge higher, but they'll surge higher. However, the other catalyst actually is a stronger economy. More people going out, more people driving, flying. The airlines use a lot of crude oil. But the other aspect is that the U.S. government is starting to replenish the Strategic Petroleum Reserve. And what that does is it takes oil out from the majors that then give it to the Energy Department. In other words, the government buys that oil. And remember, they only have now about 11 million barrels of oil that they put in. They're down quite a bit. They took out over 200 million barrels of oil. So they've got a lot more buying to go.
Quincy, I also want to get your take on the latest Delivering Alpha Investor Survey and outlooks for strategies for the first quarter and beyond. The nation's leading institutional investors, top strategists, and our own CNBC contributors are being asked which will be the top performing areas in the U.S. next year. 35% saying financial stocks, 23% saying high dividend stocks, 19% saying healthcare stocks. You also have 15% saying mega cap tech stocks. That's kind of a bit of a shock. Only 4% saying energy stocks as well as consumer discretionary. What's your take on these survey results?
Well, they change. Obviously, they change. I mean, we saw energy leading the market a number of quarters ago. Then it came down as it appeared that we were heading into a recession, and the cuts that came from Saudi Arabia just didn't matter. But what we're probably going to see going into the this year, 2024, is we're going to see, I think, the large cap growth names in the S&P 500 across the board do well, especially if the Fed comes in with those rate cuts. Remember, this rally has been predicated on the Fed finished raising rates and the Fed cutting rates. And the expectations are we'll see a rate cut in March. If we do not get that, and if the Fed somehow decides that the economy is too strong, is igniting inflation again, they're going to be forced to raise rates. That could stall the rally.